What's the biggest challenge in your business right now, and what would you say that you're doing to help with that challenge?
Finding contractors is tough. Managing flips from 2,500 miles away. So running that remote has been very challenging. So what I did to solve it was just get my damn license.
The one bigger overarching issue that I've run into over the years that I'm still working on is illiquidity.
Just trying to time on the retail side, I strictly try and follow a 120-day cash conversion cycle.
What piece of advice would you give yourself to that person that was starting day one?
If I have the same knowledge that I have now, it would probably be figure out how to keep everything you've bought.
Stop caring about what other people think. Stop caring about trying to build a certain size rental portfolio or hit a certain number of doors.
Keep private money more available for every deal. Should have went after retirement accounts from the very beginning. If you're trying to raise private capital.
So welcome everybody to today's Mastermind panel. Super excited about this. It's been a while since we've done this. We have 3 hand-picked experienced real estate investors that are going to pull back the curtain on their businesses. We're going to discuss challenges in these changing markets, how they run their operations, and how they stay competitive in this really competitive market. As you guys know, things are just super competitive. So got to do things that other people aren't doing. And the way to do that is to mastermind and get around people that are doing big things and figure out how to stick out in the competition. So again, it's been a while since we've done this, but every time we do one of these, I'm like, man, we need to do another one. So we are actually going to do these every other week. So for those of you that are in the 10X TV community, we are doing these every other Thursday. We are going to allow you guys to ask questions. And at the end, we might even ask someone to pop in. If anybody wants to pop in and kind of join the conversation, has some challenge or some challenges they want to talk through with this panel, I encourage you guys to put your questions in the chat, and then we may bring some people in towards the end. So rather than doing a one-on-one, which we do usually in podcasts, we're going to start doing these panels because, again, hearing from 3 different people as opposed to just one just opens up more ideas, more conversations, and just amplifies what we typically do on a one-on-one interview. So if you guys are on Zoom right now, of course, like I said, ask questions. We will probably repost this to YouTube. If anybody wants to learn how to get access, we are going to start opening this up to people outside of 10X TV. So if you guys want to email me at tony@prohomebuyer.com, my assistant will show you how to get access. All right, panelists, you guys ready to roll?
Absolutely.
Yeah.
All right, let's do it. So we got Travis Johnson, Jason Vell. Is it Vell or Velli? Velli, right? Veely, sorry. People butcher my name all the time. So, and then Josh Axe. So quick intro, guys. Who you are, what market you invest in, what you specialize in, fix and flip wholesale, and then just give us a fun fact about yourself and brag about yourself if you want to. So, Travis, why don't you jump in, man? Let's do a quick intro.
Sure, happy to do so. I'm up in the Minnesota market, or most people just know it, Minneapolis, St. Paul. What I kind of mainly focus on is fix and flips and also wholesale properties. Wholesale this year, later in the year, has taken a kind of different path. They used to kind of fly off the shelf. So there's a few things you have to do to a wholesale property to get it to move a little bit faster in today's market. I guess I do roughly between 70, 75 transactions a year for properties. And I would say kind of a fun fact, I grew up in a small town, so I'm not afraid of rural properties. So when people reach out from a rural community to want to sell their property, I'll buy it, but I will normally buy it for 50 cents on the dollar or less. And I get a lot of no's, but at the same time, I do get an occasional few yeses. And when I do, those tend to lead to almost 6-figure paychecks on those. So it's kind of nice to focus on those things.
That's a very first good nugget there. I think Jason actually deals with manufactured homes, which typically when I find rural properties on land, they are manufactured homes, which a lot of people don't like to do. And those people think their houses are worth a lot less than they actually are. So I've only done, like in market Wichita, Kansas, usually the price points are 150,000 to 200,000. I've done $200,000 deals, and both of those were rural properties that I think people probably wouldn't have touched because they were manufactured homes. So
Yep.
yeah, absolutely. All right. So let's lead it into Jason. Jason.
Yeah, thanks for having me, man. Appreciate it. So I'm in the Wilmington, North Carolina market. Started investing about 6 years ago. Really, business strategy from day one has been flip single family, including manufactured homes, to drum up capital to put as down payments on commercial multifamily. So I've got the flipping business right now. We're doing about 60 flips, and some of those are wholetails a year. And I think with everything we have in place now, we're easily going to hit at least 80 next year, if not 100. And on the rental side, I've got 60 apartment doors, an RV, a 33 pad RV park, a couple single family homes, and the one thing I'm kind of most excited about recently is we just did a major rehab on an oceanfront beach house that we are planning to keep instead of sell. So we're refinancing that one right now, and we've got a short-term rental manager managing it. And we're actually next week, my family and I are going to the beach house, which is only 45 minutes away from our house now, but we're going to stay there through the Christmas and New Year season for a few weeks, and get to spend time. I have 5 kids also, so it'll be fun to spend Christmas on the ocean with everybody. Looking
Heck
forward
yeah.
to that.
Heck yeah, nice. Good stuff. 6 years, you've grown very quickly. So a lot of people say you need to stay focused on one thing, but I'm a proponent of if you can focus on a few good things and have different streams of revenue, I think that's a great thing. So that's awesome that you're doing multiple things there. So appreciate you being on here.
Thank you.
Josh Axe, what's up, buddy?
Hey, how's it going? Thanks for having me, Tony. So I currently fix and flip. I started in like mid-size multifamily. My first deal was a 35 unit building and then started flipping after that. So kind of did real estate backwards. So now we flip anywhere from 50 to 70 houses a year. We were wholesaling, but the laws in my market had changed. So we went fully into the wholesale fix and flip model. So that's what we do now. We specialize in direct mail. So we're really good at direct mail. I'm actually buddies with Travis, and him and I get into it on direct mail and its effectiveness in different markets. But, one fun fact about me, I'm a recovering heroin addict. So 15 years ago, I was homeless, destitute, had absolutely nothing. And real estate's helped me change my life and change the lives of my family, my employees, and just grateful to be where I'm at.
Cool, man. Thanks for telling that story. A lot of people in that situation never get out of it. So congrats for getting
Absolutely.
out of it. Not just getting out of it, but going on the opposite side of it, right?
Yeah.
And succeeding at a high level. So that's good, man. All right, cool. Well, let's jump into the first topic I want to talk about, and that is the changing market. So some of you guys, it may have changed a year ago, year and a half ago. For me, it just changed a few months ago. I'd like to see how you guys are shifting in this market. So for me, my market, and you guys can tell me how you're seeing it in your market, houses are sitting longer. So we like even just 3 months ago, we could sell a house in 2 days. Like almost all of our houses were flying off the shelf. 6 to 12 months ago, over asking price, multiple offers. And hopefully part of that could be the season for us, and maybe it'll pick up a little bit earlier in the year. But from what I'm hearing from other people, it started a year ago or even more. So I'm kind of curious how you guys are shifting. For me, I'm planning on keeping more properties. I'm actually going to raise a fund to where we don't necessarily have to sell properties, that we can put them into a fund and keep them long term. Because I still feel like even though prices are getting stagnant, that over the next 5 to 10 year period, there's still housing shortages. There's still increases in prices that are going to happen at least probably 3% on average year, and hopefully 5% if we have some good years. My only concern is I think AI and the job market and just the stock market in general. So I'm kind of curious what you guys think about it, how you're looking at the next 12 to 24 months, and what you're doing to, I guess, get in front of it. So we'll kind of go back around. Josh, you want to give us what you're
Yeah.
doing right now?
Absolutely. So, like I said, we're fixing flipping quite a bit. One thing that we've done in preparation is really niche down on the lists that we're sending. So, we're sending way less mail than we have historically. We want highly motivated sellers, you know, that are, somewhat distressed, that need to sell their house and that they're going to be reasonable. I'm trying to fix and flip very easy properties. I don't want to hold something for 6 months while I'm rehabbing it. I want to be in and out really quick. And I'm also selling my rentals. So I actually feel the opposite of you, Tony, that I think the market's going to explode. I think there's going to be blood in the streets. And I just think so many people are over leveraged with their student debt, credit card debt. I just don't think it's sustainable. And I think something has to shift, and we're due for a pretty heavy correction. So I'm capitalizing on selling my rentals that have a bunch of equity, selling some of those dog properties that just suck, and just cashing out on that to be well capitalized when there is a shift.
All right. Interesting. Jason, what about you?
Yeah, man. I would say the one of the big things, if we go to the very first part of the process of, this what we do flipping houses is underwriting. The biggest thing is, when my sales team is looking at comps, we're no longer only looking at what has recently sold, and we're no longer just using, one comp or two comps. We're pretty strict on, we need three comps that justify the price. But in addition to that, too, probably even the more important thing right now is we put a big focus on, whenever we're checking comps, we're also checking the active listings, because there's plenty of examples where the comps look like you can sell a particular style house for 350, but then you look and there happen to be 18 more that are nearly identical to it for sale at the same price or close to it. And then you have them sitting for 60, 90, 120 days, and sellers dropping prices. And so if you were only checking comps and not actives as well, then you might think you're going to get that same price that the last two comps or three comps sold for, but the actives will tell you otherwise. And so we're kind of using our best educated guess between looking at comps and actives together to come up with what we think a very conservative ARV is, and then running our numbers based off of that. That's the first thing. The next thing is, obviously, we're not pricing aggressively. We're not pricing to try to push the market at all or try to get anything more than comps. And a lot of times we're pricing slightly under comps to try to be a little bit competitive. And even then it's strange, because we have some that go under contract within a week or less, but then we have others that do take 45, 60, 80 days on occasion. But the good thing about flipping a whole lot of manufactured homes in particular is that I'm in the lowest price point that you can get. So a lot of the times, the properties that I'm selling are the cheapest thing available. So even when there are other economic stressors, all that's going to do is force out the current buyers for our properties, and then force the buyers that would like to be at a higher price point down into our price point. So I think in what I'm doing, I'm always going to have buyers, but they are definitely getting pickier. That they're thinking, because they see it for 30 or 45 days on the market, that they can justify an offer for 20,000 under asking. And so you have to be in a good cash position to where you're okay waiting for the right offer, to where that buyer, can't hold you to the fire and have that leverage over you.
Yeah, good stuff. How about you, Travis?
Actually, I'm in line with definitely Jason and Josh. In line with Josh when it comes to, I think 2026 is actually going to be a down year. Doesn't mean you can't still have a banner year in flipping. But if you're not adjusting your numbers more conservatively, you will get burned. I feel very confident of it. For us, this is the first year that we're not actually setting our 2026 goals until March. I got to find out what spring market is kind of doing for us in our market to kind of get a gauge how we're going to release the rest of the year, how things are going to go. We're going to keep the exact same advertising budget going forward. But what we take on into our rehabs, hotels, those type of things, we definitely don't take on any pegs anymore, meaning we'll buy them and assign it to another investor. But if we can't rehab a house under 53 days and have it back on the market or sooner, it's not one that we'll take on our team. We want a very fast turn in regards to that. And then kind of what Jason was alluding to, we kind of look at only like, where are the sold comps? So I have a baseline, but literally we've we look at all the actives. If you only have 3 or 4 actives in that price range, then you can kind of compare with the comps of what's sold. But like Jason was alluding to, that if you have 8, 10 or more, in my market, it's way more than that active. That just tells us, all right, that's if you want your house to sit, just go ahead and price it there. If you want it to move faster, you have to price it below. So we look at actives as how we kind of come up with our values on our property. So that's how we're staying more conservative, is to say, hey, make sure that we're hitting our price points, but you got to still get the seller to say yes, right? Just because we want to be conservative, we still have to buy a house at a discount. But when we do, we want to be ultra safe. So maybe instead of making 50,000, you might make 35,000 on the deal, but it was safe, and you can sell it within 2 weeks of going on the market because you priced it very competitively right away. So that's how we're adjusting.
Yeah, awesome. So to wrap up, kind of some thoughts. I'll kind of touch on what other people said and then add a couple more thoughts. But you do have to look at the market as a whole, like pending, active. I even talked to my team about going into other active properties just to see what our competition is, because like you may see a house on the market and be like, man, that's beautiful. It's $230,000. But then you go in and it smells musty. And then there's some water stains that you're not seeing and things of that nature. So I think that'll be good for us moving forward, just to get an accurate picture of the market. And then just look at the worst case scenario. I'm starting to invest in other deals. And one of the things that I'm doing, that I've been advised to do, is, oh gosh, what's the term? When someone gives projections, look at what if it's 5%, 10%, and 15% below those projections. What does that look like? And if you're okay with that scenario, maybe you move forward. And if you're not, that's when you say, well, you know what? I don't know if I'm comfortable with this deal, because the worst case scenario, I could lose 25 grand, even if the best case scenario is that I could make, 30 to 50 grand. Right. And, Elijah had a question. I'll kind of touch on that a little bit and let anybody else pop in. But he says, as things get tight in the market and there are going to be more sellers than buyers, how are you guys prepared to pivot to find deeper discounts to keep consistent deal flow? And Travis, you said something that kind of hit me a little bit, is that you never want to say you're going to have a down year, but at the same time, maybe you need to be realistic, where maybe you did. And Jason, I know you're getting aggressive and increasing your numbers, but there's nothing that says that you can't say that, hey, I did 60 deals this year. I want to do 40 deals, but I want to do 40 really good deals, and make sure you're getting the right deals as opposed to just a number. And the last thing I'll say before we move on is it's also market specific, right? Like, I know, Josh, you said that you're liquidating properties, and maybe it's because your market's a little more volatile than mine. Who knows what's going to happen? I mean, it could be a bloodbath next year, but they've also been saying that for the last 3 years. Or it could just be we take a little blip and then all of a sudden something happens and then we kind of start going back up again. I mean, who knows? But for us in 2008, I've been in the market since 2001. In 2008 so 2007 is when things started happening nationally. And then we didn't see it until about 2008. And even when 2008 hit, the beginner prices, which at that point was like 120 to 150, maybe even a little bit lower than that, those were selling still fine. They were probably taking a little bit longer to sell. They might have gone down just a tiny bit, but the properties that were above 200,000, which at that point was considered more of kind of the luxury, those are the ones that took the hit. So it could be market specific, and it also could be price specific. If you're going to, so right now we have a handful of properties that are above like 250 to 300 that I'm a little concerned about putting on the market, because those are higher price properties. So that's another thing you can do, is look at the first time home buyer price point and say, I want to stay in this price point, because no matter what happens in the market, these are probably still going to sell and are going to take the least hit.
And your percentage drop, let's say the market drops 20% overall, that 20% in Phoenix as opposed to Wichita is a completely different number. Like 20% in Phoenix is 150 grand. Whereas in Wichita, it's, 50, 60 grand. So like,
If that, yeah.
you're absolutely right. And yeah, I also think there's nothing wrong with having some extra capital. And part of my thought process is like some of the loans I have, I got 5 years ago at 3% interest. And so like the amount of equity I have is way massive. So I'm also looking at like, what's my return on equity on some of these deals where if I have 250 grand in equity, it doesn't really make sense to make $600 a month. It makes sense to cash that out, go deploy it somewhere else. So that's part of my thought process with selling some of my rentals too.
Yeah, 100%. Jason, Travis, any last thoughts on that?
You know,
I would just say to piggyback on what Josh's last thought there is that's the whole reason. ROE, return on equity, is the whole reason for my strategy of not holding single family in the rental portfolio. Because so my background is in finance. That's what I went to school for, and I used to be a financial advisor and all that good stuff. And so I'm a nerd for numbers and taxation and all that. And at least in my market, the spread between what you could rent something for and what you could sell it for was too far apart. The prices were too high to justify keeping it, because when I looked at the numbers, I could see that if I sell it, even if I'm paying the selling costs and then take what's left of my proceeds and put that towards a down payment on commercial multifamily, where I'm going to have a much lower cost per door, then that, income to price point or cost per door is going to be much more in line, therefore giving me a much higher return on equity. And I still have to reevaluate every quarter or so what my return on equity is on those deals. But so far, for all of my multifamilies, the return on equity has maintained, a high enough return that I haven't felt the need that I need to sell those and put it into anything else yet.
Want to get motivated sellers that nobody knows about? Introducing 10x TV. If you want to create credibility in your market, find deals that nobody else knows about, and crush your competition, you need to check into TV commercials. It is the new buzz in the real estate investing industry since we introduced it several years ago. I've been using TV commercials myself for the last 12 years and it's absolutely crushed it. So if you want to learn how to get on TV and to do something that little to no people are doing right now, go to claimmymarket.com. Again, that's claimmymarket.com. We usually only work with 2 investors per market, so if you're interested, reach out to us and book a call to see if you can claim your market before anybody else does. Now back to the show.
So looking at next year, obviously this year. So let's touch on this year on marketing. So that is the biggest thing right now. 10 years ago, 15 years ago, you could send out a direct mail campaign. You could get a 3% response rate. And you knew when you sent a direct mail campaign out, you were getting multiple deals, even if the campaign wasn't that great or the list wasn't that great. Now you got to dial in the list. Things are just so much different now. And not only that, but people are calling, 5 to 10 investors as opposed to just calling 1 or 2, of course, depending on the marketing channel. So tell us from a marketing perspective, what worked for you this year and then what you're planning on doing next year. So we'll come back around. So Travis, why don't you start us off here?
Sure. We're really focusing on the sellers. Yes, the competition has increased in our market. So we're trying to really set ourselves apart because when sellers reach out to investors, they just assume we're all the same. We operate the same. We give a cash offer, you close on any timeline. And for the most part, that is true. You have to kind of show them the value add of what you actually bring by offering your services in a very convenient way that makes sense for them to understand how you are different and how, if you happen to know who your competitors are, you can maybe point out some of the flaws, not in a bashing way, just say, hey, these are things that we don't do that our competition typically does, which is more of a negative thing, where if it's an inspection or they do inspections right before closing so they can change the number where they can retrade. We're focusing more on customer service part of the business. Even though we thought that was already our strength, we're really making sure that they're having an enjoyable experience with us. We still reach out to people even when they go with another company, but they say, hey, they really liked, like, we're the most thorough company, we were the most enjoyable to work with, it's just the numbers didn't work out. We'll still even get a testimonial from them on our Google review or Better Business Bureau. I know that sounds a little weird, but if they still had a good experience, still ask for that review, even if they put in there, hey, we went with a competitor. But that also helps improve on our end. If we're doing something wrong, we're going to expect negative feedback of some sort where they're saying, no, we don't want to leave a review. And then we can find ways to improve. So it's all about just being more customer focused on the motivated sellers. To just kind of guide them through that, hey, they're going to have a more pleasurable experience dealing with Minnesota Nice versus one of our competitors.
Yeah, that's a good point. There's little things you can do within the sales and marketing process that doesn't cost any more money. One of the things that we started doing is we ordered, I wish I had one here. We give Yeti mugs to our clients, but we do, instead of a Yeti mug, we do like a big water bottle with our logo on it. So when we go to the appointment, we give it's a gift. It's a simple $30 water bottle, and then hopefully they use it and continue to think about us, even if they're not we don't work a deal out now. And how many people give gifts when they go to a seller appointment? Probably none, right? So the little things like that can help you stick out from the competition. And I like you even if you don't get the deal, hey, can you give us a review? I really like that.
Brilliant.
So what are your top marketing channels for this year? And then is there anything next year that you're looking to do either the same or different?
For us, from marketing, the biggest part is TV. That's dominantly where most of our marketing is. What we are increasing, because in our market, one of our competitors was dominantly on billboards, and now he's choosing to get off billboard, kind of going to TV and radio. So those billboards are way more cost effective. So we're adding in billboards and a streaming service. I think it's called Tubi. Again, I had heard it from Heather from your guys' team, and we're giving that a try. So we're adding in essentially, we already do pay-per-click, SEO, a little bit of direct mail, but dominantly TV. But then we're going to add in some digital billboards, strictly digital billboards, and to be a direct streaming service, just to see. It's a trial and error. It either could do nothing for us or it could do something. The cost was very cost effective to give it a try.
Yeah, awesome. Cool. What about you, Jason?
Yeah, so right now, well, I can tell you earlier this year, one of the biggest changes that we made is we completely cut out all PPL, all pay per lead, just because the lead quality over the years, as everybody knows, has gone to absolute garbage. Those companies got greedy and they went from getting SEO and PPC quality leads to getting, cold email inbound, leads and stuff. And then a lot of them even started reselling the same lead to multiple people. And it just got to be to where it wasn't worth it. The cost per lead was terrible. The lead quality was terrible. Cost per deal ended up being horrific. And now we do Facebook and Instagram ads, PPC, SEO. The SEO has been phenomenal because there's surprisingly, I'm in a market with about 500,000 MSA, and surprisingly, there's very little serious competition, out here. So, and that's another thing. When I talked to Noah not that long ago, and he looked at my market for TV, we talked about potentially in a few months when I get back from a country where I'll be at, when I get back from a trip where I'll be out of the country for a few months, I think we're going to try doing some TV and see how that goes. But for right now, it's mostly PPC, Facebook, Instagram, and SEO. And, I'll say this year, the Facebook ads have definitely been the most effective, the lowest. Well, I guess SEO would still maintain the lowest cost per deal, but as far as putting more marketing dollars in and getting something out, the Facebook ads have been the most effective for us this year.
Interesting.
That's the first time I've ever heard anyone say that.
Well, that's kind of what I was going to say. I've only had probably 3 people that ever said Facebook ads do really well for them, maybe a handful. We do Facebook ads, but we do it to pair with our TV and radio more for brand awareness. And when we restarted them earlier this year, we started getting a 3 to 4x return, but then that dropped off as we kind of stopped getting deals from it. And it still may be a 2x return or something like that. So tell us about that, Jason. What's the secret sauce there? Are you doing that yourself? Do you hire someone to do it, or?
No, I hired a small little boutique firm to do it, and uh, they I think their ads are just a little bit different than what we've all seen everybody else do all the time. And they have some of their employees record like fake testimonial videos sitting in their car, and they actually look legitimate. It's not like the crappy acting that we've all seen on a bunch of ads before. It's not fake AI stuff. But surprisingly, the best performing ad has just been not a video, just a static image where they'll take a picture of a person or a couple or a family of all different ethnicities and types and ages standing on like the front porch of their house or right in front of their house, holding one of those big fake checks, like the 4 foot long checks. And I think they're real images, like from people that won Publishers Clearinghouse or something like that. And then they just Photoshop my company name and logo in the top left of the check, and then they'll like blur out the person's name or whatever. And that one style of ad by itself, even though they do like a dozen different variations of it, that one style of ad has been the most effective for whatever reason. I'm sure that'll change at some point, but for now, it's working well.
I love it. I love it. Good stuff. So Josh, you mentioned direct mail.
Yep.
Anything else that you want to add to that, and anything else you're doing this year to add to your marketing?
Yeah, so we brought PPC and Facebook in-house. So that's been a welcome change. And then with our direct mail, we're really going back to basics. We're scrubbing our own lists. We're going direct to the counties for lists. So your pre-foreclosure, your delinquent tax, we're stacking those with equity, with other, absentee, vacant, failed listings is a solid one right now. So if you add that filter on top of everything else you're doing, it cuts your list down quite a bit. So you don't send as much mail. But if they've already raised their hand saying, hey, I want to sell my house, they listed with an agent and they couldn't get an offer, they're a prime candidate for someone to reach out with a cash offer for their house. Because a lot of times they've already moved, right? Right now, people are selling because they need to sell. So if they can't sell, they still need to sell. They just haven't had success yet. So that's been a really good filter that we've added. And then on top of that, another kind of pro tip, all of us have thousands of warm leads in our database. So every other month, we've been sending a handwritten thank you letter to all of them, just saying, hey, thank you for the opportunity to buy your house. If anything ever changes, please give us a call. We'd like to make you an offer. And we're getting a huge response from that because so many people, they say, no, I don't want an offer. They're still in their motivated situation. And if you hit them with that letter, then they may come back around. And so we've been pretty tactical with the mail that we're sending. And that's had a great response rate.
Yeah, you guys see why I love this mastermind style podcast, or I call it podcast, but just interview style. I just love getting different perspectives from different people, and everybody has just like a little bit of a different spin. So for us, everybody knows TV's been the number one for us for, I don't know, 13 years now. Radio has been really good in the past. This last year, it took a dip. We were still, I think 2 or 3x return on our investment. And that's still not 100% measurable because sometimes they say, they called us up from a postcard, but then they said they heard us on radio. So radio doesn't always get that 100% benefit. And so even though I say 2 to 3x, it's still probably higher than that considering the conversions we've probably gotten from other marketing. Facebook, I mentioned earlier, we were getting a really good return at the beginning of the year, then it kind of tapered down a little bit. And I like those ideas. Sometimes when something's not working, it's not necessarily the marketing channel. Maybe it's just switching something up. So I like that visual of like someone getting a check and holding it. And I'm sure you could go on Chat GPT and probably just prompt it to make an image like that and that kind of thing. So I'll definitely send that to my team to look into. And then we stopped direct mail late last year in 24. And I kind of regret it. We were getting a pretty decent return, but we were spending a bunch there were just kind of different reasons we stopped it. And then we started it back up again. And to Josh's point, it's not necessarily the amount of money that you spend or the amount of pieces you send out, it's the quality of it. So we actually had two different companies that were sending mail out for us. One of them was $6,000 to $7,000 a month with this big list. And then we hired this company that we found that does these very niche lists, and they get it's only like somewhere between 30 and 100 leads per month. And then they add it to the mail list. And then we spend, I don't know, a couple $100 a month. And we were spending 6 to 7 grand a month with this company. And we were spending a couple $100 with this other company. And it might have been a little bit more than that. It could have been closer to 500, but it, fluctuates depending on the size of the list. And we got a big deal from that small list one month. And then, for 2 months, we didn't get any from this other list. So I think working smarter sometimes, when things are good, sometimes we forget to work smarter and we're just throwing money out there. And, last 3 years have been great and money's just coming back in, but now things are changing and we just have to be a little bit smarter with the money we spend. And, niching down a list could be that thing that helps you spend less money and still get the same return. So cool, good stuff, guys. So let's get a little vulnerable here. You can go as deep as you want to. What's the biggest challenge in your business right now, and what would you say that you're doing to help with that challenge? And maybe if you bring that challenge up, one of us can help solve it as well. So Josh, what is the challenge you're working on right now, and what are you looking to do about it?
Yeah. So, as I mentioned earlier, Pennsylvania changed their laws in January this year to where you can no longer assign contracts without a license. So, when I started, I was fixing flipping houses with my own cash and whatever. And so, this year I was like, well, we'll just fix and flip again. No problem. Finding contractors is tough, and managing flips from 2,500 miles away. I live in Phoenix, by the way, and I invest in PA. So for those who don't know, so running that remote has been very challenging. So what I did to solve it was just get my damn license. So I'm like getting the license, within the next week or two, taking the test tomorrow. So we'll be able to wholesale again. There are some rules that you have to follow now, but it'll be a licensed activity. So that's what I'm doing. And, I think that's kind of been my biggest struggle, is just the decision fatigue from flips is massive in comparison to a wholesale transaction. Wholesale transaction, your team can determine, we can buy it for this, we can sell it and make 25 grand. Yep. All day long. No one needs to talk to anyone about that. But now if a bathtub's not in, hey Josh, what do we do with this bathtub situation? Hey, what do we do with, this paint is no longer in stock? Just little questions like that every day are man, this is brutal. And I have a great team now. I have a better team than I've ever had. So it's not, and the market's different. It truly is a different market than the last 5 years. Making money in real estate's tough right now. So we've really gotten tactical with everything that we do, and getting back to wholesaling, I think, will be a huge relief for my team, for me, for our bank accounts. It'll be great.
Cool. Good stuff. What about you, Jason? What is your challenge, and what are you looking to do about it?
And I would say, had you asked this, this time last year, I would have several more answers to give you. But luckily, this past year, we've really improved a lot of stuff. I feel like we've got, our marketing team and our sales team and processes down. Our construction process is running better than ever. Our funding and financing is running smooth. So we've really got a lot of the pieces in the machine running really well. The one bigger overarching issue that I've run into over the years that I'm still working on is illiquidity. And we all know every investor at some point runs into this. And, I like the way that Marcus Krigler, from Beck CFO, that, he wrote the Profit First for Real Estate Investors book. He kind of broke it down in a way where he said, there's typically four stages in business or entrepreneurship. You got hustle stage, the secure stage, the scaling phase, and then the exit phase. But the problem is we're all motivated and driven, and we want to jump straight from the hustle phase to the scaling phase every time. And we skip that secure phase. And that's exactly what I did early on, where I would have a bunch of money in the bank account from flipping profits. And I'd say, oh, I want to go put $250,000 down on this little apartment complex. And then 6 months later, I run into a situation where I have a bunch of rehabs taking a lot of money, and several things didn't sell that I expected to sell when they should. And then I'm really tight on money. And sometimes you got to rob Peter to pay Paul temporarily and go to one of your private lenders and say, hey, will you loan me 50 grand or 100 grand for 2 months until these things sell, and then I'll pay you back plus interest. And, and you can find ways to survive, but it's incredibly stressful. And it really, at least for me, it impacts every area of my life. I'm more stressed at home with my wife and kids. And eventually, after going through that for enough, years, I like slapped myself in the face. I was like, what are you doing, you freaking idiot? Like, this is all self-inflicted. Like, you don't have to be dealing with this level of stress. And so what I've been really working on heavily the last year and a half is not buying any more of those big properties that are going to take a whole lot of my liquidity out. And because for the flips, we get 100 to 110% of purchase and rehab, so we don't really have to shell out much of, our capital for those, but it's just making sure we're building liquidity. And so now the specific target that I have, which is what Marcus recommended in his, presentation that I saw, was you should have at least 3 months worth of expenses for your business, and for all of your short-term debts, so all of your, hard money loans, private loans for your flips, you should have at least 10% of that total loan amount as liquidity. And so for me right now, I've got around, 6 million out between private money and hard money on all of my current flips. So I need at least 600,000 in liquidity to have that 10% plus enough for 3 months worth of expenses, so I've been working really heavily towards that. I think I'll be there within the next, 2.5 months. We're at a comfortable place now where I'm not stressed out about it. I can sleep easy at night, but, we're still a good, 2 to 3 months off from being at that number that I would consider, very healthy and safe and comfortable.
Yeah, I'm glad you mentioned the cash flow question, because that's one thing that, like you said, almost every investor or business owner struggles with that at some point, and some struggle with their whole life. They never get out of it. And that's just the name of the game. And there's just a lot of different things you can do to make sure you do have enough money. And the numbers you said, I can tell you, there's not many investors that have those numbers. 10% of their loans in reserves plus 3 times expenses. Like, that literally probably almost never happens. I'm not saying it can, or not saying you shouldn't shoot for that, but that is a struggle. And I guess I just say that because if you're struggling with that right now, that's just sometimes part of the game. And you just have to make some shifts to try and get back to where it's more comfortable. And you know what? Sometimes comfort isn't a great thing. Sometimes you have too much money sitting there, and it's like, maybe I should be putting that to work. So it's also that balance of like, do I have too much money sitting and I need to do something with it? And then the other side is, do I need more money so I feel safer and more secure, right? Real quick, I want to jump to a question. Who is the best pickleball player in the real estate investing space? Thanks for that question, Elijah. And it's me. So if anybody else has a claim on that, or knows anybody else who's better, please
Tony,
let me know.
I didn't see you at Investor Fuel playing with us, so maybe you were scared.
It's because I was playing with the pros.
Oh, sure.
Oh.
No, I wasn't at Investor Fuel, was I? Which one was it?
You were. It was in Texas. I thought you stopped by the one day.
Oh, I did. That's why I think I was in and out
the
like
day
the
we played
same day.
pickleball.
Yeah. I'll be at the next one. Are you
Yeah.
pretty good, Josh? I know you
I
built.
got a court in my backyard, brother.
I was
Let's
gonna
go.
say I built a court and then I saw you built one. So
Uh-huh.
obviously you're probably playing a bunch. So I'll
Yeah.
take you up on that and we'll
Let's go.
challenge that and see
Love
next
it.
time.
Let's go.
Cool. And Matt, I got your question here. We'll answer that here in just a minute. So Travis, wrap us up on this. Any challenges you're having and how you're trying to solve them, and then if anybody has a challenge that they want solved, we can talk through that if you don't have the answer for it.
I would say just trying to time on the retail side. I strictly try and follow a 120-day cash conversion cycle. I found out that if I went 58 days on any flip, um, and if I went past it, my profitability tanked relatively fast afterwards. And this is only after seeing hundreds of flips and running the data. Otherwise, I didn't see a pattern. Day to day, you're kind of blind to it. And then I added 45 days to the market time, and that's to close. That means you almost had to have an offer the first weekend. So trying to stick to 120 days, I had to shave a little bit on the rehab side and say, hey, if I can find flips that keep me to 3 weeks, maybe 4 weeks tops, I'll steal a few more days, because when I put a house on the market retail wise, meaning the MLS, I want an offer within the first 2 weeks. That's just how I want to operate. And what's happening right now is either I'm getting it the first week right away, or I'm getting it in between weeks 3 and 4. I'm not saying that's bad overall, but I want to hit 2 weeks or less. Well, if I'm getting it right away, then I feel like I priced it too low, right? Because someone snatched it up right away. And then if it's going a little bit longer, then it feels like, hey, I still slightly overpriced it when I thought I was already being competitive to begin with. It's, there could be worse things going wrong in my business, right? But this is something that's one I would love to dial in if I could somehow get the right formula in my market to say this much percentage below what it should actually sell for is always the magic number that gets a buyer within the first 2 weeks. So,
Well, that's good. That's good to be aware of that, because sometimes when you don't know, you don't know. So you put together that if the property takes a certain amount of time or your cash conversion cycle's higher, that your profits go down. So that shows to me that you're really looking at your numbers. And I think a lot of people don't look at those things enough, including myself. I mean, I try and look at as much as I can in my team, but when you can look at trends in your business and say, well, when this happens and it's not good, how do I solve that? Those are little things that you can do in your business to just turn little dials here and there and really, really get the business that much better. So cool. Good stuff. Matt asked, could Travis go a little bit deeper on your underwriting on wholetailing? More info on what he's doing on wholetailing versus traditional fix and flip. So I think what you're doing different and how you decide whether you're just going to wholesale it or whether you're actually going to flip it.
Sure. Traditionally, what I was doing all the way up until the market kind of changed this fall for me, it's as long as it can get bank financing, I put it on the market. You clean up if there's some leaky pipes, a faucet, some outlets that are not working, stuff like that. You get rid of that low-hanging fruit stuff for that an inspector is going to find. Take care of that. But otherwise, we didn't do too much to the property. We were just pretty much list as is because we can get bank financing. What we're kind of doing now, we're doing paint, flooring, and carpet. And then I'm trying to keep anything else $3,000 or under. Otherwise, I feel like now it's starting to take on a flip pricing. So that means I can do a little bit of plumbing work. I can do a little bit of electrical. I could update lights. I might replace a storm door or front door, stuff like that, to keep it into what I call the wholesale category. But definitely the bare minimum now, I have to do flooring and paint to my hotel flips, and then try and tackle any little low-hanging fruits that are $3,000 or under. Otherwise, they're pretty much classified as a rehab. Even if it is a light one, I'd flip it over into that category.
Anybody else want to talk on that in wholetailing, on how they decide whether they flip it or they wholesale it?
I'm a little bit different in what I consider a wholesale, because if I'm doing flooring and paint, to me that's a flip.
Sure.
Because most of my flips are just flooring and paint and light fixtures and appliances. Like that's what our average kind of flip looks like. And some of them are a bit more, some of them are less. But as far as the underwriting goes, for the most part, I don't really underwrite it any differently. For me, it still needs to be good enough numbers that we could flip it. And then whether or not I decide to flip it, I often don't really know which route I'm going to go, while we're under contract. I kind of wait until we close on it and then see what our workload is for our rehab crews. And if they're going to be available to jump right on the project, then we'll probably flip it. But if they're, 3 or 4 weeks backed out, then I'll probably just have my, junk removal guy go clean it out and trim up the yard and maybe pressure wash the outside. And then we'll list it as is. And I've actually, I've had a lot more success wholetailing the really run down, the ones that aren't financeable at all properties. I've had more success with those than I have the ones that are financeable, because oftentimes the ones that are financeable, just in the market that we're in right now, buyers are still so incredibly picky. They're expecting all these things to be newer, more modern, and all that stuff, and that's just kind of annoying. But you know, one method that I have stumbled across that's helped with selling the really bad ones off or wholesale is there's one Hispanic agent in our market who has a handful of Hispanic cash buyers that otherwise wouldn't really ever look at what's on the market, but he brings them opportunities. And when I first approached him and just offered him a deal and said, hey, do you have a buyer for this? I'm unrepresented, but I'll pay you a buyer agent commission if you bring a buyer. He wasn't super enticed or anything. But then the moment that I offered for him to do dual agency, his ears perked up. And suddenly, when I would send him a really, really rundown property that was just like a giant rehab that I didn't want to take on, all he has to do is make 1 or 2 phone calls, and he's got a buyer at a price that we want immediately. And he's thrilled because even if this deal is only selling for 100 grand, he's still making 5 grand commission for making, one phone call. So that's one extra little thing. But to summarize and answer that question specifically, I don't underwrite the numbers any differently.
Yeah, I agree with both of you guys. I like just doing little things. If I wholesale, I haven't done a ton of wholesales, probably, maybe a dozen or so over the last several years. Recently we've kind of, because the market's been so good, we've been able to, I don't want to say cut corners, but like not do certain things on our rehabs. And recently, finally, it's kind of starting to catch up with us a little bit, where buyers are getting more picky. And now I don't know, we have like 17 houses that are supposed to hit the market here in the next 30 days. And my sister, who's my project manager, has come back to me and goes, I'm now second guessing a lot of these renovations because there's some things we haven't been doing. And now houses, when people go into them, they're being more picky. And so I guess my point is that I'm kind of, some of our properties were stuck right in the middle, where we didn't do a full rehab, but we didn't do necessarily a wholesale. And so to me, I think Travis is correct in that doing those little things, spending like less than $3,000, just cleaning it up, maybe getting rid of some mold, cleaning the house out and things of that nature, is the best use of money. Once you start getting into flooring and paint stuff like that, then it's like, where do you stop? Right.
It's hard.
Yeah.
So any thoughts on that, Josh?
Yeah, what we've been doing is we actually we'll close on it intending to flip it, and then we'll throw it on the market for 7 days and just see what happens. Like, we'll throw it on the market at a number that, is somewhat close to what our flip profit would be. We aim for a minimum of 40. So sometimes we'll throw it on the market with an agent for 7 days, see what kind of interest we get. And, let's say on the wholesale, we'll make 25, 30. It's like, I would rather have that quick cash and make 10 or 15 grand less than go through the whole remodel process and sell it 5 months from now. So that's something that we've been doing where, we underwrite everything fairly the same, but we'll toss it on the market and just see what happens. And we've gotten offers above asking several times this year. So that's been like, and we'll do a clean out. So like, it's clean when they walk through, but definitely not like top condition. You know, we haven't done any flooring, no paint, no like electrical repairs or anything. Just clean it out, throw it on the market, and we've hit pretty good most times we've done that.
Yeah, I remember someone saying there's no risk to doing that. If you put it on the market, especially if you have a lot of rehabs going, like it
Yep.
may take a little while for your contractors to get there anyway. So why not put it on the market for a week to 2 weeks, see if there's any bites, and then that way you don't have to rehab the property if you get a good price on it.
Yep. MLS is the best buyers list. So
Yep, 100%. Another question from Elijah. What are the things you're doing with your fire damage deals? Does anybody else do fire damage deals?
I have, yeah, they're not my favorite, but I've done them. It's my most expensive rehab ever was a fire deal.
Yeah, yeah, those can be hit and miss. I did one, I remember back in 2007, and I had a big party at it, and there was literally like hundreds of people there. It was a crazy thing. It was a lot of fun, but when we did the numbers, we made like, I mean, it was literally the roof was off of it. We added an addition. We did this whole big rehab, and we ended up, I can't remember if we made like 10 grand or lost 10 grand, but basically didn't, wasn't really much. But there was one that we bought for 5,000. We ended up getting the insurance money. So he was
Oh,
okay
nice.
walking away from the property, got 5 grand in his pocket, assigned the insurance over to us. We got like 30 grand in insurance money, and it took us like 35 grand to flip it. And we made like 40 grand on a $65,000 house, and that was,
Amazing.
gosh, 2005, 2006, when, $65,000 houses were like kind of the lower beginner. So they can be very profitable, but to Josh's point, they can be very expensive and very lucrative and take a lot of time as well.
The other thing I do is send them to my boy Elijah Rubin, the Fire King, or whatever his name is. He's the best.
Is that's why he asked that question.
Probably.
He wants you to send his fire deals over there, and he thinks that he's a better pickleball player, I think,
Of
based on
course
his
he does,
comment
but
there.
he's wrong, So he does know fire damage though, so I'll give him that.
Yeah. Yep. He said, "Send him the fire damage king." That's right. There you go. All right. Cool.
Oh, Elijah.
Gosh, I could go all day, man. This is good combo. Let me pick a couple more questions here, and we'll start wrapping up. This one's cool. I like this because when I get in a mastermind group, someone will be like, "I'm using this or I'm using that," and I'm like, "What is that?" And we look it up and we're like, "Holy crap, that's amazing." What are some tools or resources that have been really good for you guys? It could be a methodology. Jason mentioned Profit First for real estate investors, which I think David Richter is who you were talking about, unless someone on his team did a presentation. I think you
Yeah,
said,
that's right. Yeah, the guy that gave the presentation was Marcus Krigler, but that's a different company. You're right. David Richter did write that book. They're two totally different companies. Sorry
yeah,
about that.
but I'm sure they probably subscribe to the same methodology. But so yeah, is there like a book, a system, a tool, a resource, something that you guys have used that has changed your business or that you're really using right now, that you think that other people could plug in as well? Travis, we'll start with you.
Yeah, we're almost 2 years strong into this, and it worked extremely well. We used to do belly-to-belly appointments, but as we wanted to scale, it was getting hard, obviously, to attend all the appointments. So what we basically added, they give you a structure. We have 2 acquisition managers for inbound leads, web leads, however the lead comes in. They kind of triage it, just make sure it's not a retail sounding lead. If it sounds good, we send out a gentleman on our team that does a Matterport. So he'll go out on the appointment, spend about 45 minutes and do a Matterport of the house. And when I looked into Matterport, I kind of passed on it because I was like, boy, those cameras are extremely expensive. I eventually found out that they do offer a couple cameras about $400 versus like the $5,000 camera. So I went with that. It's a subscription service, so you have to pay through Matterport on that. But so the gentleman will do the Matterport. We get it back to our office within 2 hours after the appointment. I'm able to review it through our CRM. I look over, so that allows me to already look at the rehab budget right away just by looking at what I see in the Matterport. It's pretty detailed. We do have a separate sheet that identifies if there's slopes, if the house smells, because obviously camera can't pick up all those things. So we have those little notes that he makes and uploads. But we basically make our offers off of Matterports, and then I'll come up with an offer for our team, and then our team will contact the seller again within 24 hours and make an offer on the place. So I would say the biggest transition for us was switching to Matterport stuff. And then it also helps us with Dispo, because obviously now that you already have a flow of a house, you can send that link over to anyone that you want to dispo, and you can get offers without actually running people through the house until you actually get them more qualified. And now we got our usual 5 or 6 people that buy a lot of our houses. They've trusted Matterport so much now, we don't even have to invite them to the house. They trust the process, and they're making offers literally off of Matterports. So that's been the biggest change for us.
That's amazing. And that's utilizing your time so you don't have to go out to every property, right?
Correct.
We did something kind of similar. We use GoPro cameras. So I bought
Sure.
my team a GoPro camera, $300. We bought a $50 subscription. When they get back to, they do a video of the property. And then when they get back to the office, they plug it in, it automatically uploads to the cloud. They grab the link. And then when they get a property under contract, they send all the details with a link to it. So if I ever want to go into the video and they have a question, then I can just go in and see it. So how much is each Matterport when you have someone go in and do it?
Because he's on our team, it's just an hourly wage.
Okay.
And he's a part-time gentleman. He's a real estate agent. So he does that, and then he looks for filler stuff. So it kind of worked perfect with our system. He stays flexible for our stuff. So he always hits the appointments, but he's also doing listings and sellings on his other side of the business. So we're fortunate that way.
Cool. Very nice. What about you, Jason? You got a tool or system that you use that you want to share?
We really don't do much that's unique. Truthfully, we're pretty boring. One of the little things that I can say probably not a ton of people are using yet is in the CRM that we use, Simply, they do have AI agents, AI like bots, and so we do have an AI answering assistant person like set up to answer any inbound phone calls during evenings and weekends, so that we make sure that no phone call gets missed, because I don't expect my acquisitions guys to work those hours. If they choose to, then they're welcome to, but I don't have that expectation. And I don't know, it could be better to outsource a VA or something for evenings and weekends. I'm not really sure. We haven't tried to go that route yet, but the one big change that we are implementing soon is I'm currently working with a securities attorney to create a debt fund. And once that's fully set up and functional, I'll be moving all of my current private lenders into the debt fund, and I will then probably raise another 2 or 3 million into it. So then hopefully I won't have a need for hard money anymore. The fund will be the only lender, and that will also streamline everything. I won't have to remind lenders to wire money. I won't have to ask them to review their loan docs. I won't have to pay the closing attorney $650 per closing to draft the loan docs, because the fund can have its own loan docs that my assistant can just plug and play the numbers each time and send those loan docs to the attorney to use. So that alone will, just that loan doc prep fee will save us 50 grand a year in legal fees. And then it just streamlines everything. The fund has the money ready to go. We wire the money from the fund to the closing attorney every time, and then we don't have to worry about having satisfactions filed on behalf of the private lenders, all that kind of stuff. So not only will it reduce our cost of capital a little bit further, but it will also reduce those legal fees and really just streamline the whole process for us, make things a lot simpler.
I love it. How much did it charge? How much did they charge you to do the debt fund?
I paid a company 25,000, and it includes the whole setup of the debt fund and the fund management entity, and also gives me access to their fund management software that has like investor portals, and it automatically, can send out their payments every month and generate their monthly statements and all that stuff.
Well,
Pretty turnkey.
Yeah, I mentioned earlier that I'm putting together a fund. One of them is probably going to be a debt fund. I just got quoted 15,000, so I was just kind of curious how much you were paying. But yeah, that can definitely streamline things, can potentially save you money, and could be a great tool. So love it. Thanks for sharing. Josh, what about you?
Yeah, I mean, I'll piggyback off of Jason. I use RE Simply as a CRM and probably started that 2.5 years ago, but I cannot recommend the CRM any higher. They have AI agents built in, chatbots. You can build your website on it. It links to your bank account, so you have all of your bookkeeping entries inside of your CRM. You can see your actual KPIs tracked monthly, weekly, whatever. It will help you manage your employees' time, their tasks, how many leads you get per day. I mean, it's a phenomenal program built by a real estate investor for real estate investors. So, um, yeah, it's been a stellar tool for me. So nothing super unique on that. Um, you know, there's not a lot. We're pretty straightforward and simple. We stack our lists. I pull them myself. Um, yeah.
Cool. So I love Sherrod. I love Ari Simply. I think it's a great CRM. One thing we're doing is we're shifting to Left Main, which is on Salesforce.
Mhm.
There's really only two reasons we're shifting. One is once you're on RE Simply, if you need something that they don't already have, you have to request it. And they're actually really good about listening to customers and getting things implemented within a 6 to 12 month period. But if you want to do something custom, you can't. With Left Main, it's built on Salesforce, and so we can go on the back end and we can add different features if we want to. Second thing is there was some reporting that we couldn't quite get that we wanted, and Left Main did have that reporting, and they also have, and maybe Sherrod's working on this as well. But when a lead comes into the CRM, it'll score the deal, it'll do some different stuff with AI on the deal, and then it will scrub your CRM every, I don't know if it's every day or every hour, whatever they do. It's probably every day, and we'll see if there's any activity on that house. Did that house go for sale on the market? Did it sell? Any activity. So that way, if it's in your CRM and your team's following up, and it goes, somebody bought it and it sells, then it'll mark it as sold. Then you don't have to follow up with it. And on top of that, if your county or city has data on what it sold for, you can look at it and go, oh wow, look, this house sold. This was a hot lead. It sold for, $3,000 more than we could buy it for. Why did we not get that deal? So it can kind of hold your team a little bit more accountable. And there's some other things that it can do as well. So no CRM is perfect. They all have their positives. They all have their negatives. If you're looking for something simple and easy and plug and play, 100% RE Simply. I love it. Sherrod's amazing. I love RE Simply. But because we want something a little more custom, we decided to shift. So, all right, good stuff. Gosh, I got so much more. I'm trying to figure out how far we should go here. Let me answer a question. Robert asked, with competition growing in fix and flip, wholesaling, and multifamily, what other real estate classes do you see as opportunities to move forward? So I will answer the question, and you guys can talk about any additional opportunities you guys are looking at. For me, I am realizing that real estate investing on a residential level is very, very competitive. It is very transactional. And that's why I've decided to build a real estate portfolio. So I've been doing that pretty much since 2001, is building a real estate portfolio and adding on to it. And one thing that I'm doing this year, or that I just decided to do at the end of this year, that is going to start next year, is raising money to invest in other people's deals. So what I'm doing is I'm raising money in a fund. So I think I'm going to do two different funds. And if I can figure out how to combine them, I will. One is a debt fund, like Jason talked about, raising money and then using that money and just paying the investors a fixed interest rate. The other one is raising money and saying, hey guys, I've invested your money in these other deals. You've made money there. I'm going to try and go out and find other deals that are 20, 30, 40% returns. You will get, whatever the number is, 6, 8% preferred return. And then anything above and beyond that will split at a certain deal split. So I've got a deal right now I'm looking at in Lake Tahoe. It's probably going to be too quick for me to be able to act on. They need like $5 million. The return on it's 40%. It's, unless the economy takes a tank, I feel like it's a pretty home run deal. I'm even looking at, I've got a meeting tomorrow, a third meeting with a guy that has a fiber optic company and knows owners of buildings that he can put their fiber optic lines into and then charge $75 a month for each one of these units and thousands and thousands of units. And they just need the money to run the lines. And I feel like if we can get a few more things lined up, it's a slam dunk deal. So anyway, that's what I'm focusing on is continuing to run my fix and flip business and continue to hold properties. But I'm realizing that, at any point in time, this game could be even more competitive. And that's one of the reasons I started 10X TV and we started the media company. And I'm doing some venue space and co-working space as well. And then this will be the next venture that I get into. So that's what I'm doing. Do you guys want to expand on that? Is there anything else you guys are doing outside of just residential fix and flips and wholesaling that you guys are adding in the next few years?
So I recognize your intelligence, Tony, a long time ago, but like one of the things that I've been really pressing upon real estate investors, and I would even ask you, if you were to sell your fix and flip business today, what would it be worth?
Not much other than the real
Amen.
estate.
However, other than the real estate, but 10X TV, recurring revenue model, managers, everything in place, probably significantly more valuable than your fix and flip business. So one of the things that I've been understanding is, we could be in this business for 20 years. And if we're just fix and flipping and we're generating a bucket load of cash, that's awesome. But without us, our business is worth relatively little. So I've been looking at other industries as a whole to see, where can we create something that has recurring revenue, that's, sellable, an asset that's sellable as a business, because real estate investing on the transactional basis is not it. That's not the move if you're trying to sell your business. So I have a hormone replacement clinic that I started here in Arizona, and we have about 200 patients right now. So we'll look at expanding that into other states, but that's what I'm doing outside of real estate. And then within real estate, we're doing some loan brokering and, we've always bought rentals, so continue to do that. But
Awesome. Amazing. Good stuff. I love it. Jason or Travis, anything else you guys are doing?
I'm just starting to, well, I've been looking into, but if the market feels still good going in 2026, acquiring laundromats in my local area. Still small towns, but ones that are underserved. Done a decent amount of research and feel like that's a good cash business, money reserve thing that I want to potentially deploy.
Cool. Yeah, I hear that's a boring business that not a lot of people want to be in. Well, I don't want to say not a lot of people want to be in, but it's just kind of a boring business. But I hear it's a very good cash flow and barrier of entry is not too high. So good stuff. What about you, Jason? Anything?
Well, no, not really. I mean, to address the question, and I mean this with all due respect, but I can't help but question by the way that the question was phrased. Like everything is hard, you have to pick your hard. Yeah, and so my question is, if you're asking like what else you can do to avoid doing what's hard, I would venture to say you probably wouldn't have success in whatever that other thing is either that you went to do, because all business is hard, whether it's real estate or whether it's something else. And yes, we all as entrepreneurs have shiny object syndrome, and there's plenty of times where I think about what Joshua just talked about, selling, exiting at a multiple, And I do think about that at times, like, man, I wonder if I just like shut down the flipping business or maybe kept it going and then like started an HVAC company on the side or something that I could exit at eventually. Would that be worth it? But then I stop and I think about it and I'm like, even if I did something like that and say 10 years from now I had a $5 million exit, I still think I could make more money between now and then doing what I'm already doing, you know, than if I went and did that and shifted focus. So I'm just doubling down on what's working, what I know, what I'm an expert in, and I just plan to dominate my market. I'm already number one as far as volume goes for flippers in this market, and I want to, you know, two or three times that and make sure that nobody can catch me. And if I can be the best, then even if something is hard, you still are going to have a ton of opportunity.
Yeah, so I think the question was more of what are the opportunities outside of fix and flip and wholesale rather than taking what's hard and pivoting out of that.
Oh,
Um,
okay, okay.
and everybody's different, right? Like me and Josh, we I think we have similar thought processes in and maybe it's just ADD or whatever it is, but we want to
Probably.
yeah, probably we just want to do other things outside of it just because, it's more fun and a little bit less transactional. And I did have the shiny object syndrome back in the day. And it really hurt me because I was the one running the business and I didn't have really good systems and processes in place. So I'm not telling anybody else to go outside of what they're doing and do something else. If you're going to do that, you need to have your one thing dialed in. I only work an hour a week in my real estate investing in business, sometimes maybe a few hours a week. And so I have the ability to be able to not take focus from a business and put it into another and then have my other business get damaged. So I agree with your thought process as well. And if something's working, even if it's hard, keep doing it. But you have to admit also I think you said you're doing some RV parks and then you're also doing a vacation home. So there's ways to do things outside of what you're doing and still kind of be within your wheelhouse, right? And if you're investing in real estate and you love it and that's your one thing, I'd say go all in 100%. But if you can I feel like if you can get your business set up where it doesn't need you anymore, I think having other things that you start could amplify what you're doing and can be 100 times bigger than what you have now. Or to your point, Jason, maybe you do chase something else and maybe it's smaller than what you have now. That's something that you have to decide what's right for you.
Absolutely.
Yeah. All right, cool. All right, guys, let's start wrapping it up. So first of all, thanks for joining, guys. And Jason, Travis, Josh, I know you guys are all busy guys. Thanks for providing your wealth of knowledge to the group. I always get a lot out of these. Hopefully you guys got a lot out as well. If you guys are listening to this and you want to be a part of this group somehow, just email me, Tony@prohomebuyer.com. If you're interested in TV, go to 10xtv.co and see if your market's available. Let's do one last thought from everybody. If there was one thing, one tip you could give to yourself going back to day one when you were starting your real estate investing business, what piece of advice would you give yourself from to that person that was starting day one? Josh.
If I have the same knowledge that I have now, it would probably be figure out how to keep everything you've bought
Like it.
and lock up every deal, buy every single one of them. Because like if you know what the market's at now, you couldn't have made a mistake buying in the last 10 years because everything's gone up so much. Um, but then also like just trust yourself, listen to that gut instinct. I knew bad deals when I bought them, but I still bought them. Should have listened. And it's only happened a couple times, but you can't lose money on a bad deal. So
Yeah. Cool. Jason.
Yeah, for me, that's an easy answer. I take it back to that thought of the liquidity issues. I would tell myself to stop caring about what other people think, stop caring about trying to build a certain size rental portfolio or hit a certain number of doors. And, I probably would have, if I were really doing it now, I probably wouldn't have bought one or two of those initial little apartment complexes, and I would have kept a healthier cash position and saved myself a whole lot of stress for quite a while.
Yeah, cool. What about you, Travis?
Almost in line with Jason's. Mine is a little bit different. It would be when it first got started, hard money lenders, right? Private money lenders. Obviously, huge fees that comes with all that stuff. What I ultimately learned is to keep private money more available for every deal. Is should have went after retirement accounts from the very beginning, because I realized a lot of investors won't ask for their money back to, let's say, go into Bitcoin or go into some other investment. The shiny object, right? Someone got more excited on something. So as soon as they got the money back from a deal, they wanted to deploy it somewhere else, which hurt my business. But I realized everyone that had self-directed funds or retirement funds that we could put into self-directed, all they cared is they got their money back from the deal, and then I could redeploy it again and keep the interest going. To this date, I still haven't had anyone that's offered me retirement funds ask for the money back. They've always kept it redeployed on another deal over and over. So if you're trying to raise private capital outside of a fund or anything like that, I would say my experience is go after the retirement accounts.
Awesome. I'll wrap up and I'll say I probably have a couple things. One thing is the point I think a couple people said is this business is really hard, and business itself in general is hard. And I think the first 10 years I beat myself up a lot because I made a lot of mistakes. And so I guess two parts to that. One is I would probably tell myself no matter what, it's going to work out. Like you're going to have bumps in the road, you're going to have obstacles. For the first 10 years, I literally thought I was one of the only ones having issues until in 2000, actually, it was more like 6 years in business. And I met a multi-millionaire. He's making like $3 million a year. This is back in 2007. And I told him I was having cash flow issues. Only time I had ever really told anybody that I was struggling. And he looked me in the eye and he said, I struggle with cash flow issues every day. And I'm like, what? You make $3 million a year. How do you struggle with cash flow issues? Right. And so everybody struggles. They all have their different struggles, but typically it all works out. And then the second thing is it kind of goes to what we're doing here is have coaches, have masterminds, have people that you lean on for advice. Like even coming to this today, this morning, I woke up and I'm like, the market kind of sucks. And I'm kind of like thinking, what happens if it goes to shit in 26? And I'm like having all these thoughts. And then I come on here and we start talking. And then all of a sudden my mood starts lifting and we're talking about, some different high level things. And it just kind of lifts my mood up and kind of gets me going. So I can say right now, in 2000, like I said, in 2007, I'd been in the business 6 years. That's when I really started seeing that I needed to start talking about some of these things. Because when I told him I had cash flow issues, he actually offered to loan me money, and he loaned me money for a short amount of time, and it helped float me for 6 months until I could pay him back and kind of get back to where I wanted to be. And now I have coaches, I have therapists, I have masterminds, I got off a call with my fractional CFO earlier today, and we were talking about the fund and just different money things. And just having a really good team around you that you can lean on, I think is super valuable. And I wish I would have learned it a lot sooner. And I didn't join my first, masterminds weren't around in the early 2000s. It wasn't until 2012 I went to my first one, and still that wasn't even much of a thing until like probably 2015 when Collective Genius came around and really started revolutionizing the mastermind concept in real estate. So, all right, man, hour and a half, guys. Appreciate it. Thanks again for the panelists coming on here. These guys are doing high level things, and these are the kinds of conversations that we want to kind of bring to this community. I love doing this because, again, back in the day, I didn't really have a lot of help. And so doing things like this will hopefully help other people to get where they want to be faster and make less mistakes. And if you can learn from other people's mistakes and also help learn on what they're doing to get somewhere faster, it's really going to help you. So thanks again for joining, guys. Josh, Jason, and Travis, thanks again. And we'll see you guys next time.
Thanks, Tony.
Thanks, Joe.
Have a good one, guys.
You too. See ya.